All right. Good afternoon, everybody. Good afternoon. Happy Friday, all you magnificent melonheads. It's time for my favorite time of the week, my Friday afternoon live stream. And it's been a crazy week that we got to wrap up here. Stocks have been propelled to seemingly unthinkable levels that just a few years ago, we would have told you, you're crazy if you think the Dow would ever go to 44,000. It's more than doubled since 2021, guys. That's kind of, I don't think anybody in 2021 was looking around the economy and saying, yeah, I think the stock market's going to double in 3 years. Nope. S&P 500 over 6,000. Again, I don't think anybody looked at the market a few years ago and said, yeah, I think 6,000 is in the cards. Oh my God. The markets are just moving up, straight up in a big line. We have got this post-election euphoria that has just washed over asset classes across the board, all except for gold, of course. Gold has kind of underperformed since the election. So what's going on here? I mentioned it during my live stream this morning. I mentioned Trump goggles, that the press was viewing every single story through the lens of Trump goggles. Oh, the People's Bank of China, blah, 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 mentioning Trump in every single paragraph. And it was kind of annoying this morning because every single article was just attempting to make it seem like Orange Man bad, and therefore this story has a whole new angle. But the more I think about it, the whole market is wearing Trump goggles right now because they are just blindly buying like crazy, as if these Trump goggles, and what I should have done is I should have bought some glasses and put like an orange wig on them or something, and those would be my Trump goggles. So anyway, maybe it's something for next week. The market's just going up in a straight line as if all of these risks that have been out there that we've covered in great detail on this channel, as if they all vanished because their guy won or our guy won. So look, guys, we're going to talk about some of those challenges here, and we're going to talk about how a Trump presidency might address them. Would they even address them at all? Would they make them better? Would they make them worse? We're not just going to be blindly partisan here. I typically avoid politics on this channel if I can help it. It can't be helped right now. The market is running straight up in the aftermath of an election. You're going to step in some politics today. All right. So let me just premise all of this by saying, no, I do not suffer from Trump derangement syndrome. And as a matter of fact, I voted for the guy. Okay. That being said, I am not of the dear leader persuasion where anybody who says anything even remotely critical must be cast out and ostracized for violation of party ethics. All right. That's not what we do here. All right. We call it equally. We call it the way we see it, regardless of who is in charge. And in my opinion, based on his first term, Donald Trump has certain propensities that may not be very good for the economy here. In particular, his love of easy money. And so we're going to talk about a lot of that. There's a lot of challenges. Let's just talk about a couple of them real quick. The first thing, day one, that he is going to have to deal with is the debt ceiling. Because the debt ceiling comes back on January 1st of 2025. 5 days later, Trump is inaugurated. So his first thing on day one, he's up against the debt ceiling where the government can't borrow anymore, which means we're back to that ridiculous exercise where the Treasury general account starts to whittle down and the bond market starts to get a little nervous. And oh my God, the speeches in Congress. And hey, Republicans, it's time to put up or shut up. You guys campaign on spending cuts. You talk about fiscal discipline. Well, you've got the keys to the yard now. So let's see what you do with it. I personally plan to hold you accountable for the things that you said, for all the good, for everything, all the weight that carries, me and my one vote. But I plan to keep them honest. All right. If I see Republicans making token spending cuts to programs that are going away anyway, while increasing spending by hundreds of billions elsewhere, I'm going to call bullshit on that because it needs to be done. It's gone on for way too long. So that's what Trump's going to have to deal with on day one. Now, look, Trump's got the Senate. We already know that. He's got a 2, probably 3 vote edge in the Senate here. I think they called PA for McCormick. So three seat edge in the Senate, but the House is still up in the air. There are 15 seats that still haven't been called in the House. The Republicans only need to win 2 of those to maintain their control of the House of Representatives. All right. So, I don't think the Democrats are going to sweep all 15 remaining races. So it looks like the Republicans will maintain control of the House, although that's not confirmed yet. That being said, the Republican majority in the House is going to be tight. It's going to be basically as tight as it's been or tighter. And remember, there's that wing in the Republican Party that made the Speaker of the House vote. Remember what a circus it was with all the different Republican speakers of the House? Well, they are going to have every bit as much power as they had last time, arguably more so if the Republican majority gets even slimmer. And so the Republicans in the House are going to have to placate that caucus, the spending hawks. So they're going to have to cut here. And who's going to be the Speaker of the House? Is it going to stay Mike Johnson or is it going to be somebody else? Are we going to have to go through that again too? So that's something Trump's going to have to face. He's going to have to deal with the commercial real estate bubble. That's still going on as much as the market tries to call a bottom every day. Nope, that's actually getting worse. And I got an article about commercial real estate today I'm going to share with you guys. It's getting a lot worse and it's getting worse faster. Trump's going to have to deal with that. And that could be a landmine for Trump because he's a commercial real estate developer. All right. Trump's got some very close relationships with the Kushner family. Those are New York commercial real estate bigwigs. He's got to deal with that. And by the way, Steve Mnuchin and a bunch of former Trump guys coming in and bailing out New York Community Bank, that never quite sat right with me. It always seemed like they were trying to sweep something under the rug when they did that. So the commercial real estate bubble could be a real headache for Donald Trump in his second term as president. Student loan forgiveness, you can forget about that. All right. There are millions of people out there who have not made a student loan payment in years. And if you're still sitting there thinking your loan is going to be forgiven, you got another thing coming, guys. That is going to be reported to the credit bureaus probably starting this month. It's definitely not going to get through court before Trump gets into office. So you're going to have to pay back those student loans. And right now, that's money that's being spent in the economy. People are not paying their student loans. And so they're taking that money they're not paying down their debts with, and they're buying consumer stuff with it. So when student loan payments come back, we're going to see a reduction in consumer spending. We're going to see a reduction in discretionary spending. That's going to hit the economy. I think it's the right decision. But that's going to take a chunk out of GDP. Trump's going to have to contend with that. We got the yen carry trade is still out there. Plenty of things going on in Japan. By the way, Japan's inflation rate has exceeded the Bank of Japan target for 30 consecutive months now. Another way to say that is for 2.5 years, the Bank of Japan has exceeded their inflation mandate, and yet they have still only raised interest rates by 1/4%. Are they even pretending to care about inflation in Japan anymore? But now that the Fed might be slowing down rate cuts here in the States, maybe the Bank of Japan starts hiking again, and maybe that yen carry trade thing comes back. Donald Trump is going to have to contend with that as well. Oh, and we also got that, what is it, $18 trillion AI bubble that is almost certainly going to burst on Trump's watch. It's already starting to burst. My God, the super micro debacle just keeps getting worse by the day. May have more to say about that in the days ahead. And of course, last but not least, let's keep in mind geopolitics, right? The Houthis in the Red Sea, the Iranians, Ukraine, China. All right. If Donald Trump really wants to cut spending and deal with the debt ceiling and all that other stuff, the military's got to be on the table, right? Cuts to defense spending has to be an option if you're serious about cutting spending. Well, Trump has always been a very much of a speak loudly and carry a big stick kind of guy. So that big stick is expensive. Is Donald Trump going to be willing to take the hit in defense spending in order to meet fiscal discipline requirements? And if he does that, keep in mind, guys, these spikes in defense spending, all these big government deficits that happened under Biden, that is the sole driver of economic growth in America right now. We're running these $1 trillion plus deficits, and all economic growth is basically government debt spending. So if Trump does the right thing, and he takes us more towards a balanced budget, I don't think he can achieve a balanced budget. I don't think that's realistic to think he'll get there. But hopefully he takes us close, or at least a big step in that direction. That's going to come right out of the GDP numbers. It's the right thing to do, but it's going to make him look bad politically. Is he willing to stand in front of that and take that hit? I don't know. I really don't think so. So, we're going to talk about some of those things that are going to go on with Trump here and how he might react to them. Guys, we might ruffle some feathers here. I know we got a lot of Trump fans in the audience. All I can tell you guys is I'm always going to call it the way I see it. It may not always be what you want to hear, but I can promise you I'm always going to give you my best, honest, no bullshit assessment of what I see. So get ready for that. And with that, why don't we shrink my big melon of a head, and I got to get up from my chair for just a quick second, something I never do when I'm live. And I'm going to say hello to Mish because my cat just opened my door, and it's bugging the heck out of me right now. Mish, how are we doing?
Okay. So we got about 2 trillion, 2.4 trillion, something like that, debt in the last year. which means we need to come up with about $2.4 trillion in cuts. And really, the only way to do that is 33% off of everything. Everything. Doesn't matter. But doesn't matter. Everything.
33%. I mean, let's think, Mish. We've been through how many debt ceiling arguments together and, debates. Do you think 30% across the board or the 2.4 trillion, can it be done?
Can it be done? Absolutely. Anything can be done. But will it be done? No, because in the end, we've created this system where the employee has to go back to the customer every couple years. Are you still cool? Can I keep doing what I'm doing? So you can't make too many tough decisions and give up that lucrative career that you've built yourself.
And part of the reason why we're in this mess that we're in is because this Federal Reserve has created a situation where I think we have been mistakenly conditioned to believe that difficult decisions are obsolete. We don't need to ever make difficult decisions again. I understand this spending program is important to this person, but this spending program is important to this person. Oh, it doesn't matter because the central bank can just monetize the debt forever. Thanks, Keynesians. And so we don't have to make tough decisions. Mm-hmm. And we're a lot like children that way, right? But I want candy before bed. I really want it. You don't understand how important that candy is. You don't love me. I mean,
I was talking to this person, and I really wish I could tell you where, but I think it was somewhere between Cambodia and Laos. And they were basically, what they were saying was, it doesn't matter. We're never going to pay back this debt. So why bother? Just put everybody on universal care and just let it go, because blow it, basically party until the party's over, because we can't turn back now.
So it's basically like the guy who's just given up and he's out there right now and he's running up the credit card and he's living the high life on it, right? That card is going to stop working someday. That card is the bond market, right? I mean, that's what that is. And the only way to keep that card working is for the Fed to keep monetizing the debt that card represents. And, well, you can't pretend to care about inflation if you're going to keep swiping that card, right? I mean,
well, I think the Treasury has us right on the edge of what is acceptable for buying bonds right now. If they go any harder, the interest rate's going to keep going up. So they're kind of playing that game, and I think they're on that edge right now. Yellen's edging. So they're right on that edge for the bond market, and if they spend much more, I think it's really going to blow up the interest rate.
Speaking of the Treasury and on the edge, I've just realized I don't think I'm going to continue with these Treasury buybacks anymore, since I have no motivation to artificially prop up liquidity in the bond market now that my guy didn't win re-election. So I guess I'm going to go ahead and stop with those buybacks. Thank you, Secretary Yellen. Will Yellen continue to juice liquidity via Treasury buybacks now that the next guy is coming in behind her?
Well, that's the next big question, right? So we're writing all these checks for $2.4 trillion. How's the next administration going to handle this? Because as we know, Congress doesn't move much faster than a glacier. So,
yeah, I mean, that's a real
question. It's a good question.
I don't think Yellen will keep doing it. And, here's another question. I think that's a given. I think any day now, Yellen will probably start to knock down the Treasury buybacks. I don't know. Maybe they don't react in real time like that. But here's something else I wanted to talk about, too. While the Federal Reserve has been engaged in quantitative tightening, this chart that I got up on the screen here, this is U.S. Treasury securities maturing 10 years or more from now that are held by the Federal Reserve. This is the Fed's holdings of long-term U.S. government bonds. All right. Now, the Fed has been telling us that they are slowly unwinding their balance sheet, that they're getting rid of this debt, right? That's what they've been telling us. But if you actually look, let's zero in on this a little bit more. Let's go to, say, since mid-2022 when they started quantitative tightening. Look at this chart. Does this look like the Fed has been unwinding their holdings of long-term U.S. Treasury debt? To me, it looks like the Fed's holdings of U.S. Treasury debt has been going up this whole freaking time, As a matter of fact, March of 2022, which is when they started QT, the Fed held about 1.4 trillion, we'll round it, about $1.4 trillion of 10-year or longer. So this is mostly 20 and 30-year Treasury bills or Treasury bonds. All right. 1.4 trillion. Right now they're at 1.528, which means what the Fed has been doing is basically the same thing Yellen has been doing with her Treasury buybacks. They're reducing their total holdings of U.S. government debt. But what they're doing is they're selling a lot more of their short-term U.S. government debt, and they're using some of the proceeds to buy even more of their long-term U.S. government debt. So their total holdings have gone down, but they're still artificially propping up liquidity at the long end of the yield curve, and that's what has a bigger effect on things like housing and auto financing. So will the Fed continue doing this under Trump like they did under Biden? I don't know.
Well, they're insider trading themselves, right? They know the interest rate's going to be coming down on the short end, so they buy a bunch of short end because then they can refi it at a lower level, come back, refi the long-term stuff, and then switch back to long-term. But it's basically insider trading, right? Because they know they're going to do something and they're going to profit from it.
Yeah. And you know, it's also another one of these reasons why, because Yellen has been doing something similar. Another reason why the interest expenses have gotten so out of control with the debt is because of all the issuance of the long-term stuff, all the issuance of the short-term stuff that with an inverted yield curve had come with a higher interest rate attached to it. And so the deficits were getting bigger as they were borrowing more of the short-term stuff and then retiring 10-year T-bills that were sold at 1% in 2015. So they've been artificially raising the debt carrying expenses. And, you know, the Fed, meanwhile, they've been telling us that they're taking liquidity out of the bond market, but they've been net adding liquidity to the important part of the bond market, the long end. I just don't know if they're going to continue doing this. Will all of these accommodations continue under a Trump presidency? I don't know. We'll have to see who Trump puts in as Treasury Secretary if he keeps it up. But anyways, that was
the new Treasury Secretary will come in 26, I believe February 26.
You mean Trump is going to keep Yellen on the job? You think?
No. I'm thinking Fed president. I'm sorry.
Fed president. Yeah. I don't. I don't think Janet's got much stay power. I think it's time for Janet to start collecting those speaking fees.
Well, that's a good question. Have we heard who the Treasury Secretary might be?
No, we have not. We have had very few cabinet announcements. I know his chief of staff was announced yesterday.
Yeah,
and she's a in the background kind of gal who.
Yeah, she's a campaign supervisor.
Yeah, which is usually who the chief of staff ends up being is more of a political animal. All right, let's see what
it's more of a thank you and let's keep doing this thing.
Yeah, someone who's in charge of his poll numbers.
Yeah.
And that's another thing. Well, this is Trump's second term. He's got no reelection to worry about now. So what does a Donald Trump unhindered by political concerns look like? What comes out of his Twitter account then when he doesn't have to worry about reelection? It's not going to be dull. It may not always be fun, guys, but it ain't going to be dull. I can tell you that. S&P 500 at the moment is up 22 points, 5,995. We're selling off a little bit in the close here. We were briefly over 6,000. It looks like we peaked around 6,015 points today. Let's take a look at the long-term chart of the S&P. Utter madness. Look at this, up and to the right, relentlessly. And just look at since the election. There's your Trump goggles right there, guys. You see that? Nothing but green arrows ever since. A big up day on Tuesday, big up day Wednesday, Thursday, and today as well. Pushing 6,000 in the S&P 500. The Dow, meanwhile, up another 276 points today, 0.63% higher, still above 44,000. We went as high as about 44,158 today, off the highs slightly here. Looking long-term, these are daily candles now going back to about the start of the year. Again, look at the Trump goggles here, guys. Just blind optimism since the election, straight up in these last couple of days. Now, look, I think Trump is probably generally a better for business president than Kamala Harris would have been. But I think this is getting a little too ahead of itself here. I think the market is pretending like all these problems that it's facing just suddenly don't exist anymore because Donald Trump, and that's just not true. The NASDAQ, meanwhile, is just barely positive today. This is kind of interesting. The Dow, the S&P doing pretty well, but the NASDAQ is fighting to stay in positive territory here. At the moment, it's only up 6 or 7 points or 0.04% higher, 19,275 points on the NASDAQ. You look at this one, still a green arrow. NASDAQ had a really good couple of days to begin the week, though. So a lot of positivity. Also, another all-time high here, closing just below 20,000, 19,279 for the NASDAQ. Trump, speaking of the NASDAQ, Trump is going to have to contend with this AI bubble. I cannot imagine any set of circumstances where this bubble is continuing to inflate for 4 more years, not with NVIDIA currently valued at almost $3.5 trillion, not with Supermicro, clearly now a case of widespread accounting fraud. Supermicro, one of NVIDIA's biggest customers. NVIDIA is going to have to take some kind of hit from Supermicro, either in their accounts receivable that Supermicro probably won't be able to pay now once the fraud is exposed and the lawsuits start coming. And when they get delisted and all the ETFs start selling off their stock, I mean, Supermicro is toast here. And the question is, how much does the damage spread from there? We were talking on Twitter yesterday with the Orcafin and a couple of other guys about the fallout from Supermicro and the question of, well, Dell is kind of rising to take their place in the AI bubble now. NVIDIA has been doing a lot of this server rack business with Dell. But you know, the thing about Dell is they're not making any money doing it. Dell's revenue numbers are skyrocketing, but their earnings are flat because they're selling their server racks at near zero margins. So there is no way, in my opinion, that Dell is going to absorb all of that demand coming from Supermicro when they're already doing so much work and making no money doing it. I just can't imagine Dell would really do that. So NVIDIA has a reckoning as a result of Supermicro. I don't know how big it's going to be yet. I don't know if it's going to spread to other companies, but Trump is going to be in power when that bubble bursts, and thus he will get the blame for it. Whether it's his fault or not, it doesn't matter. He'll be in power when it happens, and so he'll get the blame. U.S. dollar index, meanwhile, stronger dollar again today, another 50 basis points, 105 even right now. That's up 48 or 0.48% here. Take a look at the dollar here. A lot of volatility since the election. Let's zero in a little bit on these last couple of days here. All right, we had a wild move in the dollar on day one after the election. Then we gave back half of those gains yesterday, and now we got back some of that today. So the dollar sharply higher from where we were pre-election, but we are definitely seeing a strengthening here that should be putting some downward pressure on asset prices, but that's not what we're seeing, not at all. Meanwhile, in the bond market, we've got not a lot of movement in bonds here. The 30-year, 4.478, down almost 7 points. So the 30-year's making a nice move today. The 10-year, 4.315, that's down about 2.5, maybe 3 points here. The 2-year, 4.262, that's actually up 4 points. And the 1 month at 4.596, pretty much where it was this morning, up about 2 basis points. Looking over at bonds now, a lot of red in commodities, not bonds, I'm sorry, this is the commodities board. A lot of red in commodities here. That stronger dollar is really hurting metals here. Spot gold, 26.88, that's down $18, about 0.2% today. Spot silver at 31.30, that's down about 73 cents or 2.25% here. Silver's taking it on the chin today. I still like the shiny though. Copper down 2.6%, platinum down 2.1%, palladium down 2.5%. WTI crude still above $70 for December WTI futures, but it's down $1.89 or about 2.6% here today. All right, let's talk a little bit about some of these stories, some of the challenges that Trump is going to have to struggle with. But, you know, before we do that, I have to say, here's a word I've not heard in a long time. Well, we'll get to it in a second. First, I want to say thank you so much, Jose Orozco, for the super chat. Appreciate that, brother. Trump will fix it. Trump will fix it. I hope he does. I wish him luck. I'm skeptical, Jose. I am skeptical, all right? Having been through Trump's first term, when Jerome Powell was raising interest rates, Donald did everything in his power, bashing Powell and everything, trying to get him to stop raising rates, trying to get him to stop doing quantitative tightening. Oh, you're hurting my stock market, all right? And, you know, ultimately, the country needed that QT. The country needed those higher rates. Now, Powell threw in the towel. Powell threw in the towel. It rhymes. I like it. Powell threw in the towel in September of 2019 with Repo Man as he instantly started monetizing debt when the bond market threw a fit in the middle of the night on September 16th, 17th, 2019. But Trump was always a big proponent of the easy money. And when the vid hit, when the market crashed and all that debt was going up in smoke, Trump was a big proponent of big debt spending packages, of the Federal Reserve opening up the liquidity bazooka. He was right there calling for more of it. Right. And that is the wrong decision. That is the wrong thing to do this time around, if it comes to it. And given Trump's record, I'm not sure he fixes it. All right. When the cards are on the table, when the cards are down, when things are going wrong, Trump will do what they all do. He'll print and spend. Call it a hunch. It's just based on empirical data on what he did last time. I hope he doesn't. I hope he chooses a different path, because when you do that, when you print and spend, you just victimize the very people who put Trump in power again. All right. It was the working class. It was working people, the forgotten man, that put him in power right now. Kamala outspent him almost 3-1. All right. Wall Street, the big money was not in Trump's favor. He took some of it, but it was predominantly for communa. So I just hope he remembers who put him there. That's all. Call me skeptical. And thank you very much, Joey Sox. There is a word I have not heard in a couple of years. Some wawa kofefi. Kofif. I think you're saying coffee, but some kofif.
Oh, you don't remember that gaffe from like 2018 in the middle, like 2 a.m? Trump texted out Kavafi.
Kofefi.
Yep.
Well, is that what the word is? Now that actually is a word, right? Isn't a kofefi like a gaggle of people or something? What is kof? I can't believe we're talking. Kofifi is a word widely presumed to be a typographical error that Donald Trump used in a viral tweet when he was president of the United States. It quickly became an internet meme. But what does it mean? What is the definition?
I don't think it means anything. I think it now means something because he did it.
Simple English Wikipedia. Okay, it's a presumably misspelled by then President Trump viral internet meme. Despite the constant negative press, kofefi. But isn't it actually? I don't know if it's actually a word.
I don't think it actually means anything. I think it's just literally as a typo.
Okay.
And people jumped all over it.
The kofefi. All right. Well, I'm going to enjoy some nice hot Wawa kofefi brewed fresh every day, courtesy of Wawa, the very rampants from which we defend our idle lifestyle. Thank you very much, Joey Sox. I appreciate the super chat, sir, and the good vibes and the flashback to Kofefi, whatever you want to call it. All right, let's talk about commercial real estate. This is a big one. Trump's going to have to deal with this, all right, or he's going to have to deal with the fallout of this. And politically, this is an area where they could beat Trump over the head because Trump has a lot of business dealings in commercial real estate and his family, right? Jared Kushner, his son-in-law, and his friends in the Kushner family, they all make a lot of money in commercial real estate. In this article, I just found this one. This is from just yesterday. This could be a big problem for him. Banks kicking can down the road on commercial property loans. Now, we've heard of this before, the can kicking. That's nothing new, but there is some very unique data in this article here, and this is in payments.com, a website I am increasingly a fan of, by the way. Double commercial property loan defaults are at their highest point in 10 years. Now, you might be saying, what is a double commercial property loan default? A double default is when a borrower in a loan that has already been modified because of delinquency starts to default on that now modified loan. In other words, he's defaulting again. That's a double default. He defaulted once. The bank said, okay, we'll extend and pretend. We'll give you this lower rate for a couple of years. We'll write down the balance. And then the borrower still defaults on that modified loan. So those are at their highest point in 10 years. As of the Financial Times reported on Thursday, November 7th, this situation has raised worries that a lending practice known as extending and pretending is masking an increasing system risk. They are kicking the can down the road, said Ivan Silic, a principal at accounting firm Baker Tilly's Financial Services Division. I think lenders are trying to work out problems with these loans, but if rates don't come down, borrowers are not going to be able to make the payments. The report noted a growing concern among regulators about the increase in loan modification and if they are distorting loan markets. A paper last month from the New York Federal Reserve warned that lenders seemed in many cases to be offering breaks to property borrowers for the sole purpose of delaying a write-off. Now, that's shady, that is sleazy, and it should be illegal. So the banks know these borrowers can't make the payments, but they're extending and pretending just to buy themselves time. In other words, the risk is getting worse. It's not getting better as time goes on. Banks extended and pretended their impaired commercial real estate mortgages in the post-pandemic period, the central bank researchers wrote, cautioning that generous modifications could lead to credit misallocation and a buildup of financial fragility. This is leading to an uptick in double defaults. At the close of September, the value of commercial real estate redefaults was up 90% year over year to $5.5 billion, and near doubling of double defaults. A double defaults. So is that 4 times as many defaults? Check my math, Mitch. How'd I do that? I don't know.
Double? Yeah, that's
it's a double. I ain't got no defaults. There's a double negative, double default. That marks the highest level in 10 years for modified, non-performing commercial real estate loans in which a stressed borrower was issued some sort of relief, a lower mortgage rate, for example, only to become delinquent once more. While just a third of these modified loans have defaulted twice, the FT adds, it is likely that this trend will continue to increase. And I can't help but notice they said just a third of these loans have defaulted. Are we using phrases like that? Just a third have defaulted? That's catastrophic levels of default, by the way, a third. There is no way banks are not going insolvent with that happening. We are in the early part of the curve, said Silic. If we continue to see rising delinquencies, we know that these modifications are just not working out. So the takeaway from this article, guys, is the bottom is definitely not in commercial real estate. They've swept the problem under the rug, and then they swept the problem under the rug that was already under the rug because the old rug was yucky, but they didn't want to spend the money to replace it after the dog pissed on it. So they just put another rug on top of that, and now they're sweeping shit under the rug that's under the rug that's under the rug. The defaults are rising, but don't worry, it's only a third of them are going into default for a second time after the banks already pretended and extended.
Well, you know, if you're a baseball hitter and you're hitting 330, you're going to the Hall of Fame, man.
Yeah. Yep. If you're a bowler and you knock down 3 pins, you kind of suck, though, don't you?
Yes.
And I think banks are more into the bowling thing than baseball. I'm pretty sure bankers go for bowling numbers. I don't know. Somebody want to check? We got any bankers watching this channel? I really doubt I have any bankers watching this channel.
Hey, so while we have a lull here, I'd like to say I'm glad to see the M&J's back from being sick. She was pretty ill the last couple of days, so she's up and about now.
Oh, welcome back, M&J. It's glad to see you on your feet digitally. I don't know if you're actually on your feet at the moment or not, but I hope you feel better, M&J. And thank you so much for everything you do for the channel. And by the way, while we have a lull here, I just want to mention that Monday is Veterans Day. So, Mish, as a veteran, thank you for your service. I appreciate that very much, sir. Thank you for everything you did, geeking out as a Navy nuke over these years. By the way, markets are open on Monday, so I will be live Monday morning. We double-checked before we went live. And also, while we're here, we have got to say hi to Nashville Pasta Man. Thank you, Pasta Man. Appreciate the super chat, sir. He says, earned media Trump
So
had billions of it.
Yeah, okay. Let me give some textual here.
Okay.
Earned media is where you get media coverage that you don't pay for. Like you have press conferences or you get them to cover a speech. So it's earned media is not the stuff you have to pay for. It's how they cover you. And he's saying he got billions of it if you sat there and put money to what he got.
Yeah, like he actually put the work in to make the appearances. You know, I mean,
How'd I do, Pasta? Is that what you were going? He'll tell me in a minute. Go ahead.
It sounds about right. And, you know, Mish and I were talking right before we went live about Joe Rogan. Trump did a 3-hour sit down on Joe Rogan, and Kamala did not go on Joe Rogan. You know, we found out after the fact that Kamala's campaign had said, no, Joe Rogan has to come to us and we're only going to give him an hour. And Rogan said, no, I'm not going to do that. You're going to do the same thing Trump did. We're going to do this equally. And so Kamala never went on Rogan. And think about who Joe Rogan's audience is, predominantly young males. And think about what demographic Trump absolutely dominated in this election, young males. All right. So, I mean, earned media Absolutely, Pasta Man. Absolutely. I think, and unearned media, let's be honest with you guys, Kamala got plenty of that because the media was clearly in her camp. They did everything they could to make her seem like a likable person. This whole party of joy thing, I don't know where the joy talking point came from, but it was clearly a memo that went out because one day everybody's just out there talking joy. I don't know where that came from. And I don't think they were talking about Joy Behar, that's for sure. But yeah, earned media. I mean, he did more interviews, he did more appearances, absolutely. And Joe Rogan was a big one. And guys, Joe Rogan's audience is bigger than Fox, CNN, and MSNBC combined. All right, so I swear Joe Rogan made a dent in the campaign. I don't know if that's what put him over the edge. But I think if Kamala had made that appearance and made an effort, she might have picked up a couple of thousand votes in certain states. And maybe it wouldn't have been so much of a blowout. But I think that is emblematic of some of the things that went wrong. I think we're probably drifting a little bit into politics here now. So I'm going to step back from that one. But thank you so much, Pasta Man. I appreciate everything you do for the channel, sir. And thank you very much to Sloth, a.k.a. Vacation Time 247. How's it going, Vacation Time? He says, how's the reverse repo looking? Seems low. We actually had a slight uptick in the reverse repo today. Let's bring that chart up here. Thank you for asking. Thank you for the super chat, by the way. Reverse repurchase agreements in the United States hit 163.6 billion yesterday, November 8th, or today, reporting yesterday's numbers. If we zoom way in here, you can see a very slight uptick from 159 billion yesterday, just off the lows of 144 billion that we hit on November 5th. But clearly, guys, reverse repo is in a new band here, down low. I think we're probably getting to that point where reverse repos are going to continue falling again. You know, since about October here, I mean, it's been falling the whole time. It started falling slower through most of the summer, and I see it accelerating now through the fall. And I expect that's probably going to continue here. Certainly, if we go back into a debt ceiling situation, I would expect to see reverse repos start to be whittled down once again. Thank you very much to Vacation Time. Appreciate the super chat, sir, and the support of the channel. And M&J, welcome, M&J. Good to see you. I'm glad you're feeling better. Happy Veterans Day to Mish, and it's our fabulous mods. Thank you so much to all of my blue wrenches for everything you guys do for the channel. Being a moderator is a thankless job. No matter what, you're going to piss somebody off every time you do it. And I can tell you the mods here on this channel do an excellent job. We have discussions every now and then about what we want to allow. What do we want to steer the conversation? Do we want to go down this rabbit hole? Do we want to let this happen? I'm very much a proponent of the First Amendment, but at the same time, I don't want a total shit show in the comments as well. And moderators, thank you for everything you guys do. I appreciate that very much. It is, again, a thankless job being a moderator on a YouTube channel. Thanks again, M&J, and she's back again. Shout out to all our amazing veteran viewers. Thank you so much, veterans, for everything you guys do for the channel as well. And, you know, speaking of veterans here, maybe I shouldn't wish veterans a happy Veterans Day by talking about spending cuts for the military, but that is a topic it's a very sensitive subject, but it's something that's going to have to be addressed because spending on the military is a huge portion of the federal
large
budget.
Portion of.
What's that?
Large portion of.
Yes. Large portion of. Proportion is scale, purportedly, and portion means a chunk of. Whatever. Defense spending is a huge portion of the federal government spending, and it's got to be on the table. Everything has to be on the table, including the things that are near and dear, like how well we take care of our veterans. Guys, we are trillions in the hole, getting worse by the day. We have to have tough conversations. So that's something else. Thank you so much, M&J, for supporting the channel. And Transspace 007, man, that's trippy. That is a trippy avatar you got there, Transspace. He says, how long do you think this bubble, housing and stock, can realistically continue? You know, that's tough, Transspace. That is hard. Like, you know, nobody can nail the timing, right? Even what's his name? Burry, Big Short, nailed it, but he was a year early and he paid for it. So bubbles are psychological phenomenons, not mathematical phenomenons. And there is no mathematical model that I am aware of that can map the behavior of crowds that are currently engaged in a stampede, right? Maybe there's some mathematician out there who can look at 500 stampeding bulls running down the road in Spain and then using some kind of weird chess wizard math somehow figure out when all the bulls are going to stop. That being said, I'm not going to stand in front of those bulls because that math wizard said, don't worry, they're going to stop here. I'm getting the hell out of the way. So that is an impossible call you're talking about there, Transspace, because what we're not dealing with rational behavior here. And rational behavior can't be modeled. Irrational behavior can't be modeled mathematically. We can just look at it qualitatively, and we can look at what's going on here. And because obviously this is not sustainable. Obviously, the companies that are behind this bubble, some of them at least have a history of fraud. One of them has a history of fraud, and there's now rather incontrovertible proof that they're doing fraud again. So we can look at that qualitatively and say this bubble won't last, but that doesn't tell us when that bubble stops. And that's one of the reasons why I never went short NVIDIA stock. Even though I was convinced that what NVIDIA was doing was bubble-like, I'm still to this day convinced they're using creative accounting, round-tripping, channel stuffing, whatever you want to call it, all of that stuff. I'm still not willing to stand in front of that bull and bet my life it's going to stop. I'm just not, because thank God I haven't. If I had done that, I would have been wiped out. I mean, if I had gone short NVIDIA stock when I first realized it was a bubble, I'd be wiped out by now. So it can always go higher, Transspace. It can always go higher. It's kind of a non-answer. It's kind of a dodge, but it's the only right answer in my opinion.
Kind of a.
Yeah.
Hey,
did I duck and weave?
Yeah. It/Nan was actually in the Army also. I think you missed that on the Super, but she did time in the Army.
I didn't know that. Oh, Mish and It's. Okay. Yeah, it's our fabulous moms. I didn't notice the capital I. That you see when your name is a pronoun, it's hard for me to Thank you so much, Nan, as well for your service in the Army. By the way, we need to get like a Nan Mish rivalry going for the Army Navy game next year or something like that. I don't know. I mean, I don't think either one of you is particularly a football fan, but
no, I mean,
might as well.
You know, go Navy, beat Army, but you know,
I can tell you, my cousin went to West Point.
Like 10 years.
You haven't? Okay, it's been a while. My cousin went to West Point, and my uncle to this day is a diehard Army fan, and he goes nowhere on Army Navy Day. That is a very big deal for him. So Uncle Norm, if you're watching, go Army, beat Navy, and just like that, all the Navy guys unsubscribed from Jack Channel. Mish, it's been fun while it lasted. And Jose is back. Thank you, Jose, who says the 10-year is the key to Greg M's MMRI recent spike ? Okay, so yes, the 10-year is among the key elements of the MMRI. The math escapes me. It's been a while since I looked at the MMRI, but I believe the DXY is in there, the strength of the dollar as well. The golden ratio is in there. The recent spike, the recent spike, I'm pretty sure was the bond vigilantes. And I'm pretty sure there was also a little bit of risk on was going on there as well. People obviously sold bonds and bought stocks on Wednesday. I think that's pretty clear. Now, if the bond vigilantes were really in charge right now, we wouldn't have seen some of the back and forth. We wouldn't have seen the yields falling like they are right now. They'd be dumping bonds still. So I'm a little bit leaning towards it was just an overall risk on sentiment, and the big move in Bitcoin and the move lower in gold also supports that. I think that was just risk on. Thank you very much, Jose, sir, for the super chat, for everything you do for the channel and for the Bucky's Corn Nuggets once again. All right, so let's do one more here. I had other stories queued up, but we spent a little bit longer talking about it. Let's talk about this Japan story. This is a big one here. All right. Japanese households cut spending once again as prices rise. All right. And this, stop me if you've heard this one, guys. But a central bank victimizing their people. Say it ain't so. And this is the central bank that's supposedly the only one in the world that's tightening right now. And look at what's happening to Japanese people. The Japanese households cut spending for a second month as inflation continues to deter consumption, backing the case for the Bank of Japan to take a cautious approach to rate hikes. And right away, this first paragraph of this article makes no sense to me. All right. If Japanese households cut spending because inflation continues to deter consumption, then why are they taking a cautious approach to rate hikes? Rate hikes is supposedly how you fight inflation. Why are they being cautious on rate hikes if people can't afford inflation? That means you're moving too slow on rate hikes. Now that that's out of the way, outlays by households dropped from 1.1% from a year earlier in September, compared with the consensus estimate of a 1.8% decrease after sliding 1.9% in the previous month. Outlays have now risen only twice in the last 12 months. Consumer spending continues to lack strength as inflation is taking a toll, said Masato Koike, senior economist at Sampo Institute Plus. I expect a gradual recovery as wages rise, but the pickup won't be one that's strong enough to drive the overall economy toward a strong recovery. Now look at this number. Spending on cars plunged 40.1% from a year earlier, slashing 1.47 percentage points from the overall data as a safety certification scandal continued to drag on the sector. A 40% decline in spending on vehicles in Japan. Good God, that is a mess. The auto industry has got some serious trouble. Put a pin in that. We got another automotive story I want to talk about. Outlays on housing, transportation, and communications and health also retreated while clothing and footwear advanced. Consumer spending in Japan has consistently failed to show clear signs of strength as shoppers have been forced to cope with prices increasing at or above the BOJ's inflation target for 30 months. And this reminds me about something I was complaining about this morning on the live stream, how Jerome Powell said unequivocally, no, we won't let inflation go below our 2% target. Like, we definitely can't give people a break. Definitely not. Deflation? Heck no. God forbid we reward people for saving. But if inflation runs a little hot, well, then it's just transitory. Don't worry. We're going to let it run hot for a little while, because of COVID. Look at the BOJ missing their target for 30 months. It's no longer, if you miss it for 30 months, then it's not really a target because you would have changed what you're doing within 30 months. That's 2.5 years. They've been over their inflation target in Japan. What the hell are they waiting for over there? The people are already suffering 40% declines in auto spending. Good God. And just so you know, Trump goggles on. Trump victory might give Bank of Japan some room to maneuver, they're saying now. Not quite sure the mechanics of how that works. I think what they're saying here in this article, we're a little short on time, so I'm going to summarize it briefly. They think the Fed is going to slow down rate cuts here in the States, which means the arbitrage, the gap between Japanese interest rates and U.S. interest rates may not be closing so fast. Maybe that gives the Bank of Japan some room to actually get off their ass and start raising rates because their people are suffering because of inflation. So that's something that Trump is also going to have to contend with. If the BOJ starts hiking again, we could end up back in this situation with the yen carry trade unwinding, like that big sell-off that we had on August 5th. And look, the Bank of Japan, they better do it soon. Since the yen started falling, I mean, the yen went as low as 139 to the dollar in September. And then as this chart was falling, that was the yen strengthening to 139. And ever since then, the yen has weakened to 152. So the BOJ better get off their butts and do something here because their currency is collapsing again. And I promise you guys one more article about automotives. Check this one out. Shout out to my buddy, Nashville Pasta Man. We've been talking a lot about the tire business and the automotive industry and Twitter DMs here. Sumitomo Rubber announces the Tonawanda plant closure. Over 1,500 employees are effective. This is a tire plant in New York. The auto industry is in trouble, guys. People are not driving as much. New cars aren't selling. The cars on the road are older. And now the tire plants are shutting down. Sumitomo Rubber on Thursday announced via its website that it will be closing the facility in Tonawanda. The plant previously manufactured tires for cars, trucks, buses, and motorcycles. According to a release on the company's website, a closure follows an extended examination of the viability of the facility, including analysis of business complexities, cost, dated infrastructure, intermittent financial performance, and changing market conditions. I don't know that we need to use all those big words. How about this? People aren't buying cars, and therefore we don't need as many tires. I think we just simplified things. Maybe that's a little excessively simplifying things, but it's pretty clear what's going on there, guys. We're seeing auto plants are shutting down every day. Another story about Stellantis layoffs, and now the tire plants that supply them are going with it. According to the release, 1,550 workers will be impacted by the closure, And the United Steelworkers Union, Local 135, is working on bargaining and severance packages. So further weakness in the jobs market. Guys, the auto industry is in big trouble. You've heard me talking about it here for a while. I guess we'll cut it there. Market is now closed. Let's see what we got. The S&P is up 23 points to close the day at 5,996. So we didn't get that close above 6,000. We just narrowly missed it. Something tells me we'll be heading above 6,000 again here soon. The Dow, meanwhile, closed up 259 points, just below 44,000 at 43,988. And the NASDAQ closed at 19,290 points, up 21 points. So we had a little bit of buying in the NASDAQ into the close, up 0.1% to wrap up the day.
Hey, real quick, say
yes.
Hi to Economic Ninja, would you?
Ninja's in the chat. Hey, Ninja. How's it going, Ninja? Long time no see, brother. Good to see you. I hope everything is going well. We haven't had Ninja over here in a while. It's been a long time since I spoke to Ninja. I'm going to get Travis.
Ninja. Let's call Ninja. Get him to do a fireside chat, maybe.
I think that is not a bad idea to get Ninja on the horn here. Ninja, thank you for being in the chat, sir. I appreciate it. It's good to see you. And also, who else? We had Melody Wright was in the chat also not too long ago. Melody, I don't know if you're still there, if you're still watching, but it's good to see you as well, Melody. And I will be on DNN tomorrow at, I think we're doing 12 p.m. Eastern time tomorrow. We're doing a DNN live stream. So hope to see you guys there. Do we got a couple minutes? Let's do one more quick one. We got a few more minutes here. All right.
I mean, we're gonna do. You want to go?
I mean, there's technically no real expiration of this. I try to keep it under an hour. That 1 hour mark is intimidating when people go to click on it.
Yeah.
What Trump's win could mean for student loan forgiveness. We don't need to read this article, guys. It means it's time to start paying your freaking student loans again. All right. You borrowed money. A stranger lent you tens of thousands of dollars so you could go to college and get a degree that hopefully results in you making more money. That person who lent you that money took a risk when they did it. And so you owe it to them to pay it back. Now, college, debatable whether it was worth it or not. At this point, college is pretty clearly overpriced, and I think college costs should come down. But the fact is, you cut a deal. You borrowed that money. And student loan forgiveness sounds really nice, but really what it is it's everybody in the country bailing you out, you the student loan borrower. That's not right. You made a decision and it didn't go your way. We should no more bail you out than we should bail out banks. And I know a lot of people are saying, well, how come Wall Street gets bailed out? They shouldn't. Wall Street should not get bailed out. I'm not in favor of Wall Street bailouts either. All right. But people who don't go to college pay taxes, and people who don't go to college suffer from inflation. So if we socialize student loan debt across the entire tax base and across the entire monetary base, we're going to make inflation worse and taxes are going to be higher. And there is no reason somebody who didn't go to college should have to pay for somebody who did go to college. That's not fair. That is not fair to that person. So this is going away. It's right that it's going away. And look, there's still something like 40 million people out there, they're saying, that still haven't started paying their student loans back. Guys, that's going to start showing up on your credit report. And if you ever want to borrow money to buy a car or borrow money to get a new credit card or borrow money to buy a house, you better start making those payments again. All right. I'm sure it was nice. I'm sure you went out and bought a lot of nice stuff, maybe took an extra trip somewhere and probably posted it on Instagram to make it look like you're living a lifestyle that you know you can't afford. That all happened at the expense of the people who lent you money that you didn't pay back. Now it's time to start making those payments again. And that also means, Orange Man, your consumer spending numbers are going to go down, because as 40 million people start making student loan payments again, they stop buying those Gucci bags and they stop taking those trips, and the economy starts to shrink. It's the right thing to do. Take it. Don't try to flood the market with easy money and make it go away. Anyway, that's my soapbox on the student loan thing. I think it is absolutely idiotic, stupid that we even had this conversation. And by the way, how are college costs ever going to go down? How is college ever going to be more affordable for somebody else if we just nationalize debt to go to pay for a college education that is not worth what they charge us for it? That just further adds more money chasing college degrees, which gives them a green light to raise tuition even more. It works the same way as housing. It works the same way as vehicles. When you give people easy money to go buy something, the price of that thing goes up. It doesn't become more affordable. Student loans, no exception there. All right, guys. So look, long story short, the premise of this whole stream today is the Trump goggles. And, look, I am happy with the way things turned out. I know a lot of people are not happy with the way things turned out. Look, I made it through 4 years of Biden. You'll make it through four more years of Trump. You survived the first Trump term. You're going to survive the second. All right. That being said, all of these, to all the pro-Trumpers out there, to all the people who are just mindlessly buying right now, nothing's really changed. All of those existential risks to the economy remain. They're still getting worse. And just because your guy won doesn't mean those go away. And also, and I said this in the lead up to the election, I said it a lot, it didn't matter because whoever wins, wins, and whoever wins gets blamed for what comes next. So to the loser, the consolation prize is the person who beat you gets blamed for what's coming. Well, Trump won, which means if Trump doesn't handle these things well, he's going to get all the blame for it. Ask George W. Bush how that turned out. Ask John McCain, who ran against Obama after the economy went to shit, how that turned out, or Mitt Romney. I don't think, I just don't think Trump's election was this magic elixir that made commercial real estate, student loan forgiveness, geopolitical tension, the debt ceiling, what else we got? The yen carry trade, the AI bubble, the Houthis, none of that stuff went away. It's all there front and center now. That being said, personally, I would have preferred it did not go to Harris. So I'm glad with that result. I didn't want Trump on the ticket personally. I wasn't a big fan of him as a candidate to begin with. I think he made a lot of unforced errors politically. I'm hoping things are going to be different in his second term. I wish the guy luck. That being said, the economy needs to shrink. All right. We need to let these numbers go down. Fake debt, fake spending is propping everything up, and that's got to stop for the long-term health of the country. If Trump wants to be a good president, he needs to let that happen, and he needs to take the heat that comes along with that. Being the guy who takes away the punch bowl at the party doesn't make you win any popularity contests. But if everybody's driving home drunk, it's the right thing to do. So that's about all I got to say about that. Mish, you got anything you want to throw in there before we wrap this one up?
My candidate didn't make it to number 5, so I voted fifth party.
Fifth party, not even third party. So
no, Legislate Marijuana Now Party out of Nebraska.
Oh, you're one of the normal guys.
Libertarian group.
All right. How did that? It passed, didn't it? Didn't Nebraska?
Oh, yeah. Like 74%. It crushed.
Wow. Yeah, that passed. All right.
There's still some legal challenges, but 74% goes a long way to getting the judge to go, you know what? Yeah.
By the way, speaking of low-hanging fruit, I think that's one that we can probably, if that passed with 70% in Nebraska, I think that's a safe one, Republicans. I think you can give a little on that one.
Nebraska just voted in with the 74% margin medical marijuana.
I think you're safe
going 70% to Trump.
Yeah.
So that should tell you something.
Yeah. It's time. It's time. Enough of throwing people in jail over a plant, for God's sake. And let's take the business away from the guys who do it illegally too. Yeah. All right. Anyways, that little side bit at the end there. Congratulations on your win, Mish. And everybody, thank you for joining us this afternoon. Thank you to Mish. Thank you to M&J and Nan and all my other Blue Wrenches for everything you guys do to the channel. I appreciate that very much. Appreciate everything you guys do. Thank you to my Melonheads, magnanimous Melonhead supporters on Patreon and YouTube. You guys are great. Links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.